very frequently these days, I get back the answer, why? Right. And they're not trying to be rude, right? At first, I thought maybe that's really rude. It isn't rude.
You got a crooked smile, well that don't bother me much. You double over working double time, you double tough. I'll just shine it up until the sun hit like a glare. I gotta dare, get the fuck up out the chair.
Welcome back to The Happy Dentist. Today we have Dr. Jeremy Krell, who, similar to our last guest, comes from a very unique background because he did not start off as a dentist. Dr. Jeremy Krell, welcome to the show. How are you today?
Thank you so much for having me, Ingrid. Really appreciate it. Doing well. How about yourself?
Listen, we're super excited. There's a lot of really timely things that we can talk about today, especially with Kyle's company. But before we get started, you have one very unique thing I want to talk about, which is what's the story behind you riding in Barack Obama's motorcade?
Funny you bring that up. It is a true story. I did get involved in motorcade logistics previous life. A friend fell into a position doing that, needed help, needed support. And so I came in for some years there during the Obama presidency for the president, vice president, first lady, and the motorcade logistics in helping to organize those motorcades, drive in them. Interesting position, one I didn't really know existed. Great to understand logistics and even better to work under pressure.
Very much like dentistry, working under pressure.
That's right.
You did dentistry after that?
That's right. Yeah, I did dentistry, clinical dentistry after that.
And then you moved on into something else. What is that and why?
Yeah, that's right. Kind of the journey. It's always interesting to look back. It really started with having an idea that could help people and deciding to pursue it, right? That's the jumping off point, I think, for any of us. It's the feelings, the good, the bad, the problem solving, the unknown. Those were net positive for me. So I kind of went on from where I started, which was tech, then into clinical dentistry, then into health tech with a position at Oscar Health Insurance, which later IPO'd, into dental tech, where I led the professional channel at Quip, which became a VC-backed unicorn, and then into dental investing. First sort of on my own as a family office, trying it out, part consultant advisor, part investor, across about 40 assets, and then into Revere a little over 4 years ago. So that was the arc. Always looks smoother in hindsight, plenty of learnings along that curve. But that's really how I got started and how the journey looks, how the arc looks.
And do you still do clinical dentistry?
I don't. I stopped seeing even the kind of once a month rare patient, ironically, right before the pandemic. I think I actually saw
Good timing.
My literal last patient visit was maybe January of 2020, just ironically, having nothing to do with the pandemic itself.
But do you still own clinic?
Partnered on clinics, a small group that started as one is now 5 locations in Jersey City. And that's where I, kind of keep my hand in the practice world. I'm looking to have a couple of side projects as well. One where I have a more consultative, technology-driven role, but I'm involved directly with the management. And another one where we're looking at an innovative sort of implant. I keep my hand in that side of the industry as I enjoy it and, see where the growth goes.
And before we start learning from you more about the world of investing in dentistry, because I think that's where we can learn the most from you. I think that Ingrid and Kyle can speak from the other side, a company looking for investment and you becoming an expert on raising money and investing in opportunities. Before we jump into that, my first question is already more philosophical. You said that everything that you do now started with an idea, of course, and it sounds simple after it becomes a reality. We know that a dentist saying, okay, I'm going to start an investment fund, that is like bold. That is like crazy. What made you transform this idea into realization, into reality? What are the things that you think are responsible for the fact that most ideas don't become a reality?
I think for me, looking at it kind of more introspectively and personally, what pushed me to get there and do it, it was my passion for helping people that led me to healthcare. It was my skills, the sort of people person that I am, the sort of part engineer, the one who likes to take things apart and understand how they fit back together, the part artist, having an appreciation for the aesthetics of things that led me to dentistry. And then I think it was the impact, having impact, making a positive difference on large populations that led me to kind of the business of dentistry. It is in other words, combining my passion and my skills. I think a lot of people out there can create a product, but for example, right, why be a dentist? and go this direction? Why not just go this direction? Why not go a traditional finance route to get into VC? Why not another direction? I thought being a dentist would help me both upstream the innovation, the design thinking, the selecting the best ideas, and downstream the product market fit, the customer success, the adoption in that process. Those are things. I have an MBA too. I went to business school. While they speak about these types of concepts in a book, as a dentist in dentistry, I know how it actually works in practice. That's the reason I go to dental school. To the antithetical component of that, why don't people do it? I think it's probably the negative to some of those comments. They don't follow their passion. They choose a more risk-averse pathway. They stick to what they know. They stick to clinical dentistry, and whether or not they have an idea, they sort of suppress it. They decide not to take that extra step to step out of their comfort zone and pursue it.
Well, I think it's just so different in dentistry. Like when I graduated from dental school, my dad's a dentist. All I knew was what my dad did, which was you get out of school, you start a practice, you do that practice until you retire, and that's what dentists do. I didn't even know you could be a speaker, you could create companies, you could be a researcher, you could work at a university. Like I didn't know all the opportunities that dentistry had. I think it's just so normal to just be a clinical dentist. Not that that's a bad thing. If you tell other dentists, I'm going to start this company or I'm going to do this, they're kind of like, why? Just because it's so different.
It relates a lot to, I have 3 young children, and I'll tell you, it's the funny aside, when we tell people, even in the school, who don't necessarily, we're just meeting, they don't know we have 3 kids. We tell them, they say how many kids they have. We naturally say how many, we say 3. Very frequently these days, I get back the answer, why? And they're not trying to be rude, right? At first, I thought maybe that's really rude. It isn't rude, right? They don't understand it's normal for them. They grew up in a family of 1 kid or 2 kids. There's a certain workflow around doing that and running that model. And the thought of 3, where your kids are outnumbered to adults it's out of the workflow sort of scope that they know or that they're comfortable with or that they have. It's not that they can't do it. It's a matter of being beyond the scope. Everybody's not willing to go beyond the scope.
I can attest to the fact that the more kids, the better, the more fun you have.
And I'm coming from a family of 4, and I do have 4 as well. And in US, I get that kind of comment as well. 4, are you insane? 3, they say, why? 4, they are like, you're completely insane and makes absolutely no sense. I will never trust you because you're crazy.
Kyle, you have a really big announcement today.
Pearl announced today's Pearl, the company that I co-founded and ran for many years. We raised $58 million in a Series B. That's at a $400 million valuation. Exciting time for everybody involved in the company and my friends and family and colleagues that invested when it was just an idea. Yeah, it's exciting. I never thought this would happen. This started as a conversation in my hygiene chair. Now, as a $400 million valuation company that's in 120 countries and really leading the AI world, it's an exciting time.
Absolutely incredible.
Congratulations.
And it goes to show that you have this idea and it can turn into something.
Look how apropos for our conversation today. And congratulations, Kyle, to you, the entire Pearl team. And it's a win, I think worth noting. It's a win not just for the Pearl family and community, but it's really a win for innovation in dentistry. It's yet another marker and a data point that shows this industry is innovative, the innovations work, and there's an accretive outcome for folks.
Yes.
And a value chain that pays off there all the way down to the provider world, the patient world, the payer world, everybody in that sort of healthcare triangle. Job very well done and well deserved.
Yeah, thank you.
Such exciting times. Jeremy, you are such a unique person in the sense that it's in the world. Do you know how many are there in the country?
When we started 4 years ago, that we were really the first and only venture capital fund focused on dental technology globally. We are now seeing other types of investors pop up, angel groups and other types of networks and communities that want to invest, and even more just individual angel investing, right? We are seeing many more investors come out of the framework. And that is really one of the most heartwarming. And when we think a little bit about legacy, and not to put any cart before the horse personally, or professionally, it is really great, right? To see this ecosystem become ripe. Because when we got here, we were sort of looking at a fragmented sort of desert climate that lacked the core resources to really have a central innovation, system, and power behind it. And we're seeing those start to come to fruition now. The bare ingredients of soil with nutrients, water, sun, the things you need to grow. It's great to see others pop up. It takes a village. This is a big industry. And so it's really great to see others kind of come to the stage.
How did you start this idea?
For me, it was coming out of my own experience, having invested in and or been a startup guy, builder, operator of other startups, first in tech, then health tech, then dental tech, and going through the experience, especially in my family office too, with so many clients running into the problem. How do we pitch this thing to an investor that's going to get us? It's those painful moments of, as the founder, spending so much time trying to convince the investor about the industry rather than focusing on the team or the pain point or the solution, right? None of the things, that you really should be focusing on, you were. Instead, you were participating effectively in a research effort for the prospective investor who just didn't really get it. You had to mark to some other type of tech in order to even speak to any of the other funds. So coming from the Quip perspective, we'd pitch ourselves as a consumer product or a beauty product. If AI in dentistry was where it was today, they'd be one-to-one, matching to other AI solutions around the tech industry, saying, this is what we can do. Forget about that it's in dentistry, maybe even healthcare. Here's what we can do because the other AI companies in tech can do it. And you get very far away from the core business. And quite frankly, I find that that's a process of seeking investment that it's already against the entrepreneur, the odds are, in successfully getting a yes. So it comes with more objection. And from the investor's perspective, they're also just doing research on the industry. They're not super likely to invest in one they don't know or they can't help in. It's a space with hindered capital flow, and that just can't possibly work to support the size industry that we have. You're talking about 4% of GDP in the United States. It's $200 billion worth of care annually spent on dentistry. That doesn't even touch the product markets that are around it. You certainly cannot support that without a focused effort on funding these technologies, and funding them comes with a base requirement of understanding them.
As someone who has gone through that, I first fundraised in 2019. I am super grateful for what you do. I can attest to the fact that it's really challenging. Like, I was just going not to dental, to conferences every evening, essentially in New York City, practicing as an orthodontist, after work, meeting investors who were like, dental, you're an orthodontist? What are you talking about? Go back to being an orthodontist. And literally just getting no's. I can talk about how hard and how challenging it is, but dentists know the problems, and they're fast learners, and they're smart. So incredible. And there's something that you mentioned to me before that I think you said you have 5,000 healthcare investors in Revere. Is that right?
In the broader network, there are that many, with access to directly in the Revere network, access to well over 50,000 practices. Within its broader network, probably about 120,000 practices. There's a huge access point there just in terms of being able to intersect with technology and provider or practicing world, as well as on the investor world, from our institutional co-investors to our corporate investors, to our angel investors, to our high net worth individual investors, family office investors, fund to fund investors. I can't even tell you how many different types of investors have come to the stage saying, well, if there's going to be a stage, we want to be behind it. We want to know what's going on here. They needed a stage. Sometimes there just needs to be somebody who comes forward and builds a stage. And I'll be the first to say, first mover is not always an advantage, can very much be a disadvantage. You spend a bunch of time, a bunch of money structuring things that a lot of other folks that are going to benefit from. So it is often the second or the third that stand the chance to be a winner. And I think others in other sectors can relate. Kyle with Overjet and Pearl and a few coming to the stage early spent a lot of time, a lot of effort, a lot of money campaigning effectively around the industry.
Yeah, we spent so much time and money and effort on education.
That's right. And I'll tell you, Revere tracks 24, 28 different AI companies in dental that with applications to radiographs, not even the other AI applications in dentistry. Is 28 globally that we track now, I think. And numbers 6 through 28 are all benefiting from what the work of numbers 1 through 5, effectively did.
Right.
I feel the pain.
Digital dentistry, and also education, Christian, which you know so well.
Changing behavior, convincing people to add an extra step, do things differently, invest because of a long-term return, not having a clear vision of why do differently. We went through that with DSD. I'm pretty sure, I agree with you. I'm 100% sure that new companies will probably create services very similar to ours and will benefit from it financially much more than we did. And we struggled for 10 years to even convince a few dentists to even think about it.
The prospect of dentists becoming investors. I'm so lucky that Revere is such a great partner to Two Front. The dentist investors are some of the most helpful investors. I've got people on speed dial every single week, much more so than my venture investors. I would love for more dentists to start investing. And what advice would you give them on starting to invest in dental technologies?
View it a few different ways for the individual dentist. One way is purely from a financial perspective. You got to look at your own portfolio, whether it's you, financial advisor, or somebody else helping you to manage your finances and your investments, and the way you're looking at whatever it is, familial wealth management or even retirement, however you're managing your portfolio, right? You need to have diversification within that. Most dentists, they invest in themselves, in their practices, which is the right thing to do. They also invest in other common assets, sometimes often in the market. They'll invest directly in stocks, bonds. They'll invest in real estate. There's a host of typical investments dentists will make and people in the dental industry will make. What I encourage them to do is compare them, contrast them, figure out what is high risk, high return, what is lower risk and lower return, and where is your portfolio right now? And how do these things stack up? And if you don't know, and if you can't find out, I'm happy to answer the question for you, because we track it very carefully against many of the main industry markers in some of these different investment categories. But you better figure out how alternative assets, fit into your portfolio. So that's one answer. Another answer is holistically, how are you supporting dentistry? This is the profession we all adopted, have spent so much time and effort in our own ways to build. Are you putting money back in to the sector? Are you taking it out? That's another way to look at it, more holistic.
No, I like that. I never thought about that.
A third way I would say is, how do you view the tech, specifically with what we're doing? How do you view the technology within your practice? Are you viewing that as an expense? Most are viewing it as an expense. When you have an achievement with technology, especially negotiating, is that you negotiated some lower price per month? This isn't how we should be viewing technology in our practices. We should view technologies in our practices as an investment, as an appreciating asset. How many times, even if you look at the books, how many times do you see, whether they're a practice, a DSO, how many times they actually taking the value of technology and translating it enterprise value or valuation or free cash flow, or everybody's famous word, EBITDA, or today's everybody's favorite term is same-store growth. How are they equating it to those things? I would answer it from those perspectives as to why to invest. It really starts with, how are you looking at, especially technology, how are you looking at it in your practice, in your portfolio, in your career?
I would add one thing, and I'm not an expert on investments at all. I'm speaking from that perspective. For me, since I was not into investment and I didn't have this financial know-how, I always struggled what to do, and I always relied on average advisors. Give the money and they will just do the average stuff. This is what many dentists do. For me, you have two options. Become an expert, really study the topic, understand your choices, or invest on what you know besides the financials. Invest on what you know as an industry, as a topic. It's like somebody that knows nothing about investment, but knows everything about football players. You get an opportunity to invest on players. You don't need to know about numbers. You don't need to know about the tricks of the financial environment. You say, I know that nobody's seeing this guy, but I know that this guy has 85% chance of multiplying his value because I know the sport. We are dentists and we are insiders. There's absolutely no investor in this world that understands more the industry than a smart dentist that understands what's going on. Going to congresses, talking to other dentists, trying the systems. And if you have a little bit of IQ, of business IQ, you can smell the opportunities. Without knowing about numbers and about money, you have a higher chance of making a better choice. For me, it makes total sense. If you're going to invest, separate a big chunk of it and invest in the area that you understand. Instead of spending years to understand other markets, you already know one. Just focus on that. Of course, you need to diversify. You have to be where you know the most. I don't know if you agree with me, Jeremy.
Yeah, no, it's intuitive to invest in what you know. I mean, diversification, also demands you probably investing in some things you don't know. I mean, I'll sit down with every dentist who is typically investing in real estate or stocks and bonds, which I'm not saying you shouldn't invest in, right? But I'll get 2 questions in, 3 questions in with them, and you'll see very quickly they don't really know how the mechanics of stocks or bonds or real estate work. But if I get 2, 3, 4, 5 questions, to your point, in about how dental technology works in the practice, even strip away some of the complexities of investing, the finance, the compliance, this and that, they do know.
Mm-hmm.
It is important. The thing I'll caution there is two things. Cautionary tale is there is, like in healthcare, there is a lot of compliance in investing. So make sure you're doing it right. You should be doing it. I encourage everybody to jump in and give it a try, but make sure you're doing it right. And the other thing that I'll say there is, in terms of risk management, when you invest directly in a company, even if you feel convicted, when you're doing that individually, you better be sure, because the process typically involves sourcing from a large sample size. It usually involves conducting pretty deep diligence. It often involves negotiating very good terms.
I don't think you should do that. I think we need to find people like you and say, okay, let me see if you agree with me that this company have a good chance. And if you agree with me, here's my money. Do all the work and I will enjoy the benefits, hopefully.
That's right.
Is
Yeah,
that what you would advise, Jeremy?
it is. It's a tale. One of the things, Ingrid, you and I have discussed in the past, even in preparation for today, common myth busting. And I hear this myth a lot come up, which is, the way I'm going to start, because it's less risk, is that I'm going to go and invest individually in this company. And I think what they mean, dentists in particular, mean by that is it's more control. They themselves understand and are making the decision where their money is going. And then there's some mental accounting, right, that comes after that, which is, if their money was lost, it's from their own decision that was made. And some are more comfortable somehow with that. Whereas if you play the statistics game, the financial game, I think investing in a fund where they're running a whole process, like I was describing before, sourcing, diligencing, negotiating, supporting, these are definitely ways you reduce your risk. I agree, it's a bad experience to not know. And I'm an investor in many VC funds outside of dentistry completely, outside of healthcare even completely. And sometimes it's a very bad experience. I don't know what's going on with my money. Sometimes I find out in the public that the fund often I find out in the public the fund invested in something I didn't even know that it invested as an investor, which is, I'd say it's common, actually.
Mm-hmm.
And so that, yes, at Revere, we turn that model on its head. That's never going to work in dentistry. And that's just not, from a philosophical and DNA standpoint, it's just not what we believe in. So we do a lot of reporting, appropriate reporting, back to the protecting the startup and their information, but also keeping investors apprised of what is going on so that they can learn. Because I think so many, for example, that come to Revere, it's not just about the investment. It's about joining a community, a network of like-minded and engaged people that want to be doing this. And it's about learning what else is out there, what is working, what is not working, what are the challenges. The people that come to the table, it's more than dollars in, dollars out, right? There's these other benefits. I hope folks who try this get that benefit out of it as well.
Amazing. Well, Jeremy, on that note, I want to switch gears a little bit and go back to something that Kyle was saying, which is probably how a lot of dentist listeners feel listening to this right now. When I graduated as an orthodontist practicing in New York City, if you said the word dental technology to me, I would have had no idea what you were talking about. I would have thought, I'm using a clear aligner made by a dental company called Invisalign. As a leading dental technology investor, I want to ask you, what technologies are you most excited about, and how should dentists who own practices be thinking about them?
Yeah, absolutely. And always love the example of Align. And I'm glad it came up here. And as industry agnostic and as a friend and partner, sort of Switzerland at Revere, Align is interesting because people forget the past. Not to harp on Align. Align was a small private company one day in the past. And it actually went through a lot of turmoil. And it actually went private and public and got there because of a lot of the same concepts that we're talking about. To your point and to your question, Ingrid, yeah, I think, there's kind of 3 categories the way that I look at it. The first is solving large magnitude pain points, things that have a robust market set to grow right now. In dentistry, 2 more specific areas that I see that fall into that bucket. People management is one of them. Huge problem. Workforce management is. How do you find, source, retain? How are you structuring your relationship with your staff? Anything to do with people management in healthcare and in dentistry and in the practice is a huge problem. There's a number of scaling up technologies that are handling that. The other one that fits in this category of large pain points with robust market growth is fintech. Practice is having a lot of problems with the front end of that, which is pay tech. Really, how is the patient going to pay in any way other than insurance? And on the back end of that, everything to do with revenue cycle management, all the insurance bits. These are huge problems, not just for the patient, but for the practice. Just a thought bite for a second. Dentistry and some areas of healthcare are some of the only business models on the globe that pay what I call a double CAC. You pay to find that patient and get them into your office. You tell them a bunch of things, which we all know largely probably even the best of the best scares them a little bit. It's expensive. It's painful. Then they walk away while you shore up their insurance questions. And then you may or may not realize it or be accounting for it properly. You pay another CAC, cost of acquiring a customer, to get that person back in. That's a double CAC. That's insane. That shouldn't be the way the business model is. The patient, it builds a lot of distrust because they have no price transparency. Nobody can tell them, how much is it going to cost me? And how much is insurance going to cover? How much am I going to pay? It's a simple question, or so it seems, and it can't easily be answered. So that's this first bucket. The second bucket is necessary infrastructure that today we lack. These are niche applications of AI that largely automate manual, analog, or otherwise inefficient or inexact workflows. A second one is equipment and supply chain intelligence, which is these are things that prevent downtime. Every office is measuring downtime. How many times does it happen in operatory where the whole practice have to go down? And it's under the control of something inside the four walls of the practice. That should never happen. And then the third is interoperability and compliance. How do things connect in our tech stack? If we're using X number of technologies to execute a patient journey, how are they connecting with one another? Does it serve the patient and the practice? Is it compliant? Right? We're seeing things like the Cures Act and Odin, which was ratified by the ADA, really come down to where both practices and technologies are going to be held accountable for giving the patient what is defined as an electronic patient record. This is real. It isn't in the future, not coming. We can ignore it. It is here. I think the third bucket, and to sum up, is areas that are aspirational growth are really exciting people. So these areas of oral systemic health links and solving real causes of diseases that can be handled in the practice because of something that we are detecting in the mouth or through our examination process, or because it's the fact of where we are positioned in the healthcare industry, which as much as on the industry side and on the dental professional side, we may complain that patients don't come to us enough or predictably. We want them on this every 6 months. On average, they come every 8 to 9 months. We're complaining. Remember, folks, they come to us a lot more frequently than the primary care physician. And so that gives us the opportunity to get ahead of problems that are health problems, not just the mouth. And then the other aspirational growth area is new forms of digital dentistry. What is going on with imaging, robotics, printing, every element of that is happening either in your practice or at your lab or between your practice and your lab that are ultimately delivering the prosthetic results to your patient.
I have a final question. Let's pretend I have a company and I want to pitch a fund, get some money, and I ask you for advice to help me do my homework and prepare for that pitch. What would be the 3 main advices to increase the chances of me convincing people like you to give me money?
It's a really good question. I usually get it in 1 of 2 forms, which is what is the anticipate what the investor thinks, or the other related cousin to this question, which we can answer another time, is what does the sales prospect think? For example, the DSO. So what does the investor think? First of all, especially if you're in any kind of early stage, so for Series B, for sure, its team is a huge factor. Who are the people? What does it take to build a relationship with them? What is their track record of success in building, in raising money, in managing that money, in making money for investors? There's a huge component that's put on team. I know it's squishy and it's subjective and people like something measurable to answer a question to this, but team is a big one. So you need to anticipate a relationship building process as part of your pitching process. It's not send over a deck or pitch once and they're going to invest. That's not it. Got to build confidence that the team can steer, especially in a difficult situation. So that has got to be number 1. Number 2, you better anticipate that a fund, especially, should be doing their homework in terms of sourcing and diligence. Don't try to put a comparative analysis that is false. Don't try to ignore or eliminate a competitor that is a true competitor, or even an indirect competitor, meaning they don't target or do the same thing exactly that you do, but realistically, a customer is only going to choose one of you. You're better off helping them do the homework accurately and disclosing what it is that you do strong and what it is that they do strong that you know of. I would accurately approach the comparative/competitive comparable analysis that you know they're going to be doing. I would say that is definitely number 2. Number 3, focus on traction. Focus on anything that can demonstrate momentum. There's this false sort of notion in the founder's head that there's some very formal algorithm and the VC is going to plug you into it and they're going to figure out if your numbers are good enough or not, and they're going to screen you in this way. And I'm not saying that VCs don't run their different formulas, and especially your return to fund analysis. I'm not saying they don't have some element, some matrix where they're comparing you to other opportunities. They do. But what VCs are most attracted to, in my opinion, is movement. Are you able to chip away at what is a gigantic block in front of you and make some kind of progress and keep them updated? I love when startups keep us appropriately updated. They send us a monthly or every other month or once a quarter update that is really well put to, thoughtful, really well laid out, and delivers, here are some results that we're generating. Even if it's not, say, a full FDA approval, even if we haven't reached 1 million in ARR, even if it's not some giant round celebratory milestone, they're still showing us on a real level what is the progress that they're making and that things are moving forward. People, VCs in particular, are attracted to movement. So those would be the 3 pieces of advice I would give.
Very cool.
Jeremy and gives those monthly investor updates. I can tell you that employees are accountable to you. So they always have that accountability. But as a founder, you don't have accountability to anyone unless you give those updates. And so by giving those updates really like magnificent in a month, you better get back on the horse. You're sending hundreds of investors an update, then you better know that you're making a lot of progress. And it's cool to have you as like the glue to all 3 of us here and sharing with our listeners. Where can everyone find you?
You can always find me in many places. ReverePartnersVC.com is our website. Find me on LinkedIn as well. Happy to engage with anybody out there who has questions, who has interest. Always happy to chat. My email, Jeremy@ReverePartnersVC.com.
We're going to need another episode with Jeremy for sure.
I agree.
Oh, absolutely.
Happy to do a
We could have a
follow-up.
couple. Well, thanks again, Jeremy.
Take care, everybody.
Thanks, Jeremy.
Ciao, ciao.
Get the fuck up out the chair. Whoa.